recording now. Welcome everyone. Just one more time. Can you hear me? Can you hear me loud and clear? My connection is good.
Yes.
Isn't the login
Yes.
that I started the recording? Okay. So it's perfectly fine. Okay, guys. So as I said, we will start every single session, every single Wednesday session with the doubted topic discussion. And this session's topic will be a liquidity sweep or change of character. Because lots of you guys did ask me recently that, hey, Flipping, how can we actually identify the difference between a liquidity sweep and the change of character? And I saw that lots of you guys are getting confused with the liquidity sweep and the change of character, and you can't really make difference between these two things. So let me just clarify the liquidity sweep and the change of characters. Will it be good for you today? Is it a good topic?
Yes, good.
Perfect.
Okay,
Yeah.
perfect.
Yes, bro.
Okay, let's just begin.
Good.
So I brought this first example. This first example is on the 15-minute chart, okay? Let's just take a look at this chart. What can we see here? We can see that here are double tops, right? Prices came above right here, came right here, tapped into supply zone, and wicked above this liquidity line right here. And this is on the 15-minute chart. So this is a 15-minute chart. How can we call this movement? What is this movement?
Liquidity sweep.
Sweep?
Sweep.
Anyone else? Sweep,
Liquidity
sweep,
sweep.
sweep, sweep, sweep.
Take out.
Yeah. Basically, according to the actual plan and technical analysis and our rules, of course, this movement right here, this big movement to the upside, is just a liquidity sweep. But we don't know yet because we are on the 15-minute chart. So technically, this is a liquidity sweeping movement. But there's still a possibility that this was a break. And how can we actually identify that if it was a break or just a liquidity sweep? We can simply identify on the next recent demand zone. And for example, the next recent demand zone in this case is right here. So if it was a sweep, price will break below this demand zone. It will easily break below this demand zone and it will continue the bearish movement. And you'll be able to enter in a bearish position right here at this demand zone because there will be a reaction. And if there will be a reaction, this will be a break and you'll be able to enter on the next recent supply zone that is called the break. But if it was just if it was a break and not just a liquidity sweep, then price will react on this next recent demand zone and it will create a change of character on this zone. Because if it was a break, then price will continue the upside movement. And the next recent demand zone is right here. And on the next recent 15-minute demand zone, price will change character and there will be an entry opportunity for you again. So once again, the same scenario goes on like for the entries, like for the POIs, like for everything. You don't have to predict shit, right? You don't have to predict it was a liquidity sweep or a break or etc., etc. You don't have to predict shit. All you have to do is react. If it was a sweep, then price will break below this zone. If it was a break, then price will react on this zone. And just simply knowing the fact that this is the 15-minute chart, this is all the 15-minute chart, and we are not trading on the 15-minute chart, we are trading on the lower time frame, for example, the 1-minute chart, you don't have to know that if it was a sweep or it was a break, because you will react on the 1-minute chart. And you will simply react on based on what the 1-minute chart is giving you. Do you understand this? If it was a break, then price will just simply continue the bullish movement with the 1-minute confirmation. If it was a sweep, then the price will simply break below this demand zone and it will continue the bearish movement. And either way, you'll be able to enter in a position based on that reaction that price will give you. But once again, according to your plan, according to your rules, this is a liquidity sweeping movement. So I still consider this liquidity sweeping week as a liquidity sweep because price stepped into a supply zone, price stepped into a supply zone right here, swept the liquidity from above the supply zone with a wick and closed below the supply zone. The body closed below the supply zone. So I still consider this movement as a liquidity sweeping movement and not a break. But you know that we consider change of characters as with a wick, right? So we consider break of structure with a body break and change of characters with a wick break. So according to the rules, this could be a liquidity sweep and this could be a change of character too. That's why you don't really know what it really is because you have to predict. You don't have to predict. You can just simply react. But according to me, on the 15-minute chart, these kind of movements where there are liquidity and where there are weak break, this will be only liquidity sweeping movement for me. So I won't consider this as a break. But for you, if you're confused about this price section, if you're confused about the situation, you can just simply wait for a confirmation. You can just simply wait for the 1 minute chart to show its hands, right? Because once again, I'm going to tell you, if there will be a break of this zone, then this was just a liquidity sweep. But if there will be a reaction on this zone, a 1 minute change of character, then this was a break of this zone and the bullish movement will be continued. Is it understandable yet? Everything is clear?
Yes.
Oh, nice. Got it.
We only wait and after react.
Exactly. You don't have to predict, you just have to react.
Don't predict what's the next move.
Let me just show you the next two examples. I move this down to here. Okay. Just a minute, guys. Right here. Okay, bear with me, please. A minute. Okay. So these movements are the continuations of this movement right here. And these movements are on the 1 minute chart. Let me just clarify this with text. This is the 15-minute chart right here. This is a 1 minute chart. And this is a 1 minute chart also. Okay. Sorry. So these are the continuations of this movement. So this upside movement is this upside leg. This is a liquidity sweeping movement. Let me just make it bigger right here. So these are the liquidity sweeping movements. And what can we actually tell about the liquidity sweeping movements on the 1 minute chart? That the liquidity sweeping movement on the 1 minute chart is looks like a break, right? So this 15-minute candle, which is just a weak break, will look like a break, an actual body break on the 1 minute chart. So this will be an actual body break on the 1 minute chart. But since this is a 15-minute zone, this is a 15-minute zone, and this is a, sorry. So this is a 15-minute zone, and this is a 15-minute liquidity. You'll know that you have to take a look at the 15-minute chart and not just at the 1 minute chart. Because if it's a 15-minute zone and a 15-minute liquidity, you'll be need a confirmation on the 15-minute chart. So if a 15-minute break of this zone happens, so let's say a body closes above this zone on the 15-minute candle on the 15-minute chart, then you'll be able to consider this break as a clear break. And then after this break, a prior continuation will be continued, price will react on the next recent demand zone, and if you change character, you'll be able to execute a long trade, and you'll be able to execute the expectation order for to the upside, right? So, but if price closes below this supply zone right here, and closes below this supply zone on the 15-minute chart with a 15-minute candle, the 1 minute movement will still look like this. Okay, but we are smarter than this, and we know, okay, I actually did move this right here and didn't want to. So we are smarter than this, and we'll be able to notice that this is a 15-minute zone, so we need the 15-minute confirmation, and we won't happen a random 1 minute break and 1 minute demand continuation right here, because this was a 15-minute liquidity sweep, right? So after this liquidity sweeping movement happens, so if it happens, you won't be able to enter in a long position, because I saw that lots of you guys are trying to take long opportunities like this. So this is the 15-minute supply zone. Price breaks above this supply zone on the 1 minute chart and creates a demand zone right here because it body broke above that supply zone. But you have to zoom out. You have to take a look at the bigger picture, because on the 15-minute chart, this will be a liquidity sweep, and you can't open a position on a liquidity sweeping movement. Okay, so you can't open a position on this demand zone right here because you'll be part of the liquidity. Because if a liquidity is being swept, what happens if this liquidity is being swept? All of these short stop losses right here is placed somewhere around here, are placed somewhere right here. All of these stop losses will be triggered with this movement. All of these stop losses will be triggered, and new orders will be placed into the market somewhere around here. And all of these new orders placed right here will equal to a big movement to the downside. This will equal to a big movement to the downside and a big reversal. That's why it always happens when price sweeps the liquidity, it will always reverse because orders are triggered. New orders are being placed. New orders will cause the inefficient movement to the downside in this short scenario, of course. So the new orders are being placed will cause the inefficient movement to the downside and the reversal again, right? Because new orders are being placed, old orders are being taken out, new orders are replacing the old orders, equals more inefficient movements to the downside. So you can't open a position on this demand zone. You can't open a position on this 1 minute demand zone that has caused this sweep, because this is a 15-minute liquidity and 15-minute zone. So you need a 15-minute candle confirmation for this. Okay, let's just continue this. Does it make sense yet?
Yes.
Bro, if it's closed on 5 minutes, it's breakout structure, or
15 minutes.
5 minutes. If it's
Just
closed,
the 15 minutes. We don't care about the 5 minutes. This is a 50-minute liquidity.
Oh,
This is a 50-minute liquidity. We need a 50-minute candle confirmation. That's all.
okay, not 5 minutes.
Not 5 minutes. Exactly. Okay,
Okay.
so let me just
Okay,
continue.
understand.
What can we do in this scenario if the sweep happens to the upside, for example, in the short scenario? What can we do in this case? We can just simply wait for a break of this demand zone. We can just simply wait for a break of this demand zone that has caused this sweep, because this demand zone will be broken 99%. 99% of the time, this demand is being broken, right? So we can just simply wait for a break of this demand, and we can wait for a reaction on this 1 minute zone that has caused the break. And you'll be able to execute a position on this zone, because the sweep has happened right here. Sweep has happened. And sorry, here's the another tap. Let me just draw it right here. It will be much cleaner. Here's the second tap, and I will draw the liquidity line too. Okay, so the sweep has happened right here and right here. Equals all of the old orders are being swept out. All of the new orders are being placed right here. All of the new orders will close an inefficient movement, and it will break through the next recent opposite zone, which will be this demand zone in this case. So price will break below this demand zone. What happens if this break happens? There will be a change of character, right? And this is exactly the scenario that I just took and executed yesterday. Yeah, right? Liquidity has been swept to the upside. Change of character has happened after a liquidity sweep. I went on a short position. This is the exact same textbook scenario like yesterday's trade. I will show you the live example, but there's a case study about it. Okay, so you'll be able to write the expectation order flow based on this new supply zone that has been created. And your next target point will be the next 50-minute zone that has caused the overall sweep, right? This 50-minute zone, this extreme zone, has caused the overall sweep right here to the upside, right? This was the origin of this sweeping movement. So you'll be able to write the expectation order flow down to this demand zone. And here comes the interesting part. What can we do on this demand zone? As I said, we need a reaction, right? What reaction can we expect on this demand zone? These two reactions we can expect on this demand zone. I mean, more reactions, but these are the most common ones. Okay, as you can see, if price steps this demand zone, creating a bearish structure to the downside, we are riding this bearish structure to the downside. We are in a short trade from here, so we close our position right here. Okay, position closed, TP booked, profit booked, everything going fine, right? What can we do after a tap of this demand zone? We can just simply wait for a change of character. And here comes the PDF part, because it is written down in the PDF, loud and clear, crystal clear. For a change of character, a several/multiple zone break is the best, right? Because let's just see this scenario right here. This is the less recent structural high point. This is the less recent liquidity structural high point. So if price breaks above this liquidity structural high point right here, we won't be able to notice or know if it was just a liquidity sweep or it was a change of character after a tap of this 50-minute zone. So we won't be able to know that if it was a liquidity sweeping movement or just a change of character. So we won't be able to enter on this zone because there's a possibility that this was just a sweep and we'll be swept out from this trade. We'll be swept out at this 1-minute demand zone because, as I said, if liquidity is being swept, new orders are being placed, right? New orders will equal the break of the next recent opposite zone. So just like in this scenario on the higher time frame, this is the higher time frame 15-minute chart. But as I said, these time frames are correlated. So these time frames are doing the exact same thing on every single time frame. 1 minute will do the exact same thing as the 15-minute. 15-minute will do the exact same thing as the 4-hour, and etc. etc. It goes on and on. So once again, orders are being swept. Orders are being swept. New orders will be placed. New orders will be placed. Break of the next recent opposite zone. Break of the next recent opposite zone right here. But this is the first scenario. So you can't open a position if only the liquidity is being swept. So you can consider this as a real liquidity sweep / change of character. I mean, sorry, you can't really consider this as a change of character. You need a further confirmation, right? And as I wrote it down in the PDF, if a double opposite sign zone is being broken, then it will be the best change of character for us. So if price breaks above 2 structural highs / lows, that will be a clear and perfect change of character. First change of character right here. We don't know if it was just a liquidity sweep or a change of character. If it reverses here, we won't be able to enter on this demand zone. But if it breaks above the second structural high point right here, that will be a loud and clear change of character, and we'll be able to consider this break as a change of character because it broke about several structural high points, right? And you'll be able to enter in position based on this 1 minute demand zone, and you'll be able to execute a long trade to the upside based on this 1 minute demand zone because this is a clear change of character to the upside and not just a liquidity sweeping movement. Does it make sense?
Yeah.
Yes.
Well, let me just read the chat. What if the double touch liquidity both? Then you wait for another. But basically, if let me just remove this, sorry. If this high is a liquidity 2, so there are 2 double taps and price changes character on both of these structural high liquidity points, then it can be considered as a change of character because, of course, these are liquidity points, but these are double structural high points. So you'll be able to consider this as a change of character and not just a liquidity sweep. Okay.
Maybe we'll wait for another break of structure.
Yeah, that could be a good confirmation. If you're
sure.
insecure about this trade, you don't want to open a position right here, you can just simply wait for another break of structure and you'll be able to execute a position on the next continuation trade right here based on the new demand zone. All depends on you.
Yes, exactly.
All depends on you, on your risk tolerance, on how much are you willing to take this trade, how much are you willing to sacrifice for this trade, or how sure you are in this trade. It all depends on you, but I'm just showing you the perspective. And once again, if a double structural high / low is being broken, then that will be a real change of character. That will be a really, really strong change of character because you've asked this question several times that, hey, Flipping, how can we identify a strong and a weak change of character? And that's how you can. If a double structural high / low point is being broken, that will be a strong change of character. But it is written down in the PDF, loud and clear. You can read it in the PDF. Okay, this is the first scenario. Let's just take a look at the second scenario, which will be this one. Okay, I will just remove it somewhere else. For example, right here. No, it isn't good. Sorry. Just a minute. Perfect. Okay. Second scenario. The concept is still the same. This movement is this movement, and the expectational downside movement is this movement, right? So you enter in a position right here. You're riding the expectation order for the downside down to this demand zone. You close your position right here. You book your profit based on this liquidity sweeping change of character changing trade. Okay, what's next? We talked about the first scenario, which was this one, the character changing movement. Now we talk about the second scenario. Since this is a 50-minute zone, and since this is a 50-minute liquidity once again, because price has created this bottom, and price has tapped into this demand zone once again and created a double bottom, this will be a 50-minute liquidity and 50-minute zone again. So the same scenario will go on just like in this scenario, right? It's all the same on both sides. So if price steps into this demand zone and creates a second bottom for the liquidity, you'll need a 50-minute candle confirmation for the break of this zone. And you'll need a 50-minute candle confirmation for the sweep of this zone. So if the sweep happens with only a big below this, liquidity line and demand zone. So if this downside candle just wicks below this demand zone and wicks below this liquidity sweep, you'll be able to consider this movement as a liquidity sweeping movement and not a change of character. But if price breaks below this line with a 50-minute candle closure, and it clearly breaks below and stays below this 50-minute liquidity line and do not reverse immediately to the upside, you'll be able to consider this as a break of the zone. And what can you do if this zone is being broken? You can just simply switch to the 1 minute chart after a 15-minute break. You can just simply switch to the 15-minute chart, mark your next recent supply zone out, and wait for a good entry criteria. This is a 15-minute candle, right? Right here, this is a 15-minute candle. But you can switch to the 1 minute chart and you can simply wait for a tap of this zone with, for example, good liquidity criteria. And you can simply wait for a tap of this zone and you'll be able to continue the short movements to the downside because the shorts are being confirmed. Sorry, the shorts has been confirmed by the break of this zone. And the only difference between the liquidity sweeping movement and the candle break, that as I said, if it was just a liquidity sweep, you can't open a position on next recent zone right here, right? Because it was a liquidity sweep, and the orders will be converted into new orders, and this zone will be broken. But if it's a break, if it's a body break, the zone that is caused the break will be a valid zone, and you'll be able to enter on this zone because it wasn't a liquidity sweeping movement, it was a continuation of the bearish order flow. And if this movement has been caused by this supply zone, and a good entry criteria is being created for this zone, you'll be able to enter on this zone by a simple limit order. Does it make sense?
Yes.
Yes, it is.
Yes.
Yes.
So what are the conclusions, guys? What are the conclusions? I'm asking you. Someone? Kazan, yeah, that's all. React. Once again, all of this strategy, all of these concepts are based on reaction, not on predictions, right? If you're in doubt, just wait for a clear reaction. Just wait for a clear confirmation. You don't have to predict shit. There's always the 1 minute chart, which can confirm all of your doubts.
Guys, you have to make a plan for your trades. And if it happens as your plan, that's good. If it happens differently, you just have to adapt and follow the price.
Okay, good. Basically, it's a 1 minute refine of the 15-minute break candle. Or yeah, actually, markets. The whole 15-minute candle is huge, right? So you can't use this 15-minute candle as your supply zone because you won't be able to find a good reaction inside of this huge candle because basically price action is inside of this candle completely. But if you switch to the 1 minute chart, there will be a really, really clear 1 minute refinement of this 15-minute candle. And that will be your supply zone. That will be your entry supply zone. So yeah.
Bro, if you want to make a trade, counter trade till the supply, how we can make it?
I wouldn't really recommend it. I wouldn't really recommend to take a counter trend trade up to this supply because this demand zone and the liquidity has been swept with an impulse movement to the downside. There's a chance that price won't reverse after this supply zone and it won't be tapped. This supply zone won't be tapped. There's a huge chance for this. So you don't want to become liquidity. If you are planning to open a counter trend trade, a long counter trend trade up to this supply zone, there's a really high possibility that you'll be swept out from the trade and you'll become liquidity because the trend has been confirmed. The trend, not trade, sorry, the trade. I can't speak again. So the trend has been confirmed that it's short, that it's bearish because the 50-minute zone, 50-minute demand zone has been broken. The 50-minute liquidity has been swept with a huge inefficient 50-minute candle. So the trend has been confirmed that it's bearish. So it's really risky to open counter trend trades up to this supply zone. But once again, it's up to you. It's up to you if your risk tolerance allows you to open a position after that supply zone, allows you to open a long position after that supply zone. It's up to you if you'd like to do it or not.
But it's possible if you have a demand below and in that demand we make a change of character and we take a long till the supply.
Yeah. If a demand tap happens, for example, okay, sorry. For example, here's a demand zone, not this deep down, somewhere around here. Here's a clear demand zone. And price taps this demand zone. You'll be able to take a long trade, but without a proper 15-minute higher time frame demand tap, you won't be able to take a long trade after this supply zone. If it reverses in the middle of nowhere without the demand tap, that will be considered as risky. If a demand is being tapped, if a 15-minute demand is being tapped, then it will be a good trade.
I mean only when it's in demand.
Only if it's in a demand. But since it's tapped the demand zone, you won't be able to risk enter here because price is coming from unmitigated 15-minute demand zone, right? So you'll have to wait for confirmation entry right here. So you can't open a risk entry right here if price is coming from a demand zone. But that's in the video course.
Yes, I know. I want to be sure.
Yeah, okay. Let me just read some questions. If there's double tap below, double tap, will you take a risk? If there is a double tap below double tap, I can't understand this question, Nikita, sorry. How can you recognize inducement before sweep? By just simply looking at the chart. I mean, liquidity is, for me, it's easy to know this. It depends on the criteria and depends on your risk tolerance once again. It all depends on you and depends on the quality of the trade. If that's the only criteria missing, that it's inside of a liquidity pool and all of the 7 or 8 other criteria have been completed, I would go for that trade. But if lots of other kind of criteria are missing, I will just skip that trade. How to recognize inducement before sweep? These are inducements, these are liquidities. You can just simply notice them by looking at the chart. Okay, guys, that's it. That's it about the change of character / sweep. I hope it cleared some doubts for you. I hope it was helpful for you and you'll be able to profit from this knowledge. Was it helpful? Did it clear some doubts for you? So we can continue the top-down analysis for the upcoming week.
Yes.
Okay, clear. Perfect. So we are going to continue with the top-down analysis for the upcoming day and week. And just switch to the 4-hour chart and let's take a look at the 4-hour chart. What's going on right here? Okay, so as you can see, we were somewhere around here yesterday. And since yesterday, prices broke below this last structural low point right here and broke below the last structural demand zone. I mean, the extreme demand zone right here. So it has created a break of structure to the downside, right? Here was a clear break of structure to the downside, which means the bearish order flow is being continued. But there's a problem with this bearish order flow. And what is the problem? I'm asking you. Thank you, Nikita. Exactly. The only problem with this bearish order flow and bearish supply chain is the liquidity. Here's trillions and trillions of dollars are sitting just above this liquidity line. And as you can see, the last break of structure has been caused by this 4-hour supply zone, right? So the last break of structure has been caused with inefficient movement from this supply zone. And this is a huge supply zone. So we will refine it on the 15-minute chart for the much precise entry point and reaction point. So the only problem with this supply zone is that there's lots of liquidity sitting just above it. And there's a variable supply zone that has been left unmitigated. And there's inefficiency that has been left unfilled. And I believe this supply zone up here will be tapped still. Because if price can break below this zone, this overall daily zone that I just drew a line for, this is the line for the overall daily zone that has been mitigated right here. So if price can break below this zone, as I said in the previous live session, it will have to collect more liquidity from the upside, right? If it reacts on this deeper area of this zone, for example, somewhere around here, and it seems like it reacted on the extreme of this zone and reverse on the extreme of this zone, it will have to collect more liquidity in the form of a triple taps or liquidity trend line right here. And if price collects more liquidity from these triple taps right here or trend line and taps into this 4-hour supply zone right here, the change of character on the 15-minute chart will surely happen right here on the 15-minute, because our trend has been confirmed that it's bearish. As you can see, our trend is clearly bearish in this region, creating series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And as you can see, the last lower high has been created right here. And since the last lower high has been created, price is in an inefficient movement to the downside, breaking below demand zones over and over again, changing characters over and over again on everywhere. And as you can see, price has just broke below an important demand level, which was the extreme of the whole movement right here. So price has just broke below this extreme level right here with this movement, with the body closure on the 4-hour chart. So I believe the bearish movement will be continued. Okay, before talking about the expectational reversal points for the short opportunities, we just have to determine the target point. Sorry, guys, I have to blow my nose out. Just a minute, sorry. Okay, I'm here, guys. So before we determine the possible reversal points for these upcoming short possibilities, we have to determine the overall target point for the upcoming shorts. And I've been already marked this demand zone down here, and I will show you which demand did I mark. As you can see, this 4-hour demand zone was the extreme of the whole bullish movement to the upside. As you can see, this bullish order flow, this huge bullish order flow has been started from this demand zone down here. And this demand zone was the origin, the extreme of this bullish order flow, as you can see. So we can consider this demand zone as a really valuable demand zone because it has changed character on several places on the upside. As you can see, here, and everywhere. And by knowing the fact that this was the origin and the start of this whole bullish order flow, we can expect a reaction on this zone. And if this zone will be broken, we can expect a deeper pullback. I mean, not deeper, upper pullback to some upper supply areas. Because if this zone will be broken, then an extreme low will be broken. And if an extreme low is being broken, that means that a weekly/monthly low is being broken. And if this monthly/weekly low is being broken, we can expect a deeper, upper pullback to a monthly/weekly supply zone, which could be somewhere around this area or anywhere else in the chart. But if this low break happens, we can really expect an upper pullback to some upper supply areas somewhere around here. Because just think about it logically. All of these downside movements, all of these structural highs and lows on the 4-hour chart is just a simple leg on the monthly chart, right? And if a low point on the monthly chart, which is this extreme demand zone down here, is being broken, what will happen? A continuation of the bearish order flow with a pullback, right? So pullback to upper supply area, reaction on that upper supply area, continuation. This is how the structure looks like, right? Okay, so let me just zoom back in. Can you show that 4-hour demand again, please? Yeah. Oh, this wasn't even a 4-hour. This is a 15-minute, I believe, or a daily. Yeah, this was a daily demand zone. I marked this week as a demand zone. And basically, this isn't a really clear demand zone because, as you can see, we can't really find a good point for this demand zone, but this was the origin of the whole movement. This was the origin of this whole upside movement. And by knowing the fact that this was the origin of this whole upside movement, it will make it stronger. But yeah, this isn't even a 4-hour zone. This is a daily demand zone. But it doesn't really matter. It doesn't really matter. Okay, go back and continue. Okay, so what can we expect right here? We have several supply zones. The first one is decisional right here. The second one is the extreme. The extreme has caused the change of character and the overall flip of the bullish structure. This was a strong low point right here. This was a reaction on the strong low. And this supply zone has flipped the strong low. So this is a really valuable supply zone for us. And it has liquidity just below it, right? So we can consider this as our extreme zone, as the extreme of the bearish order flow. Because, of course, there is bearish order flow right here. But this supply zone has flipped the overall bullish order flow into bearish. So this will be the extreme of the bearish order flow. Okay, this is the decisional zone, which has created the last breakout structure to the downside. What can we expect from price at this region? We will be able to refine this 4-hour zone to some cleaner 15-minute zone, somewhere around here at the top. And if that 15-minute zone will be tapped, we have two possibilities. I want you to draw or just write down the two possibilities for me. Guys? Another possibility, sorry, remove your drawings. I will just refine this zone. I'm asking about the 15-minute possibility. I'm asking about the 15-minute opportunity that could happen on this zone. Yes, that's the first one. And that's the second one. Yeah, exactly. I will keep this on the way it is like this. And I will refine it on the 15-minute chart for the much cleaner zone. Please just remove your drawing from the screen. I don't know who drew this. Or I will remove it manually. Thank you. So we have two possibilities right here at this refined 5-minute zone. Oh, sorry, 15-minute zone. The first possibility is if price steps this zone and creates a change of character on the 15-minute chart, we'll be able to write the expectational short order flow to the downside, because if a 15-minute change of character happens on this zone, price doesn't have to collect more liquidity from the upside, because this liquidity or this step of the zone, this order block, which is perfectly enough for the reversal. So if the 15-minute change of character happens here, this liquidity doesn't really have to be swept. It doesn't really have to be swept because the 15-minute change of character has already happened, and you don't have to worry about the overall liquidity on the upside. But if the 15-minute change of character doesn't happen right here, and price just changes character on the 1-minute chart and not on the 15-minute chart, it is really risky to enter in a short trade based on the 1-minute change of character. But we've already talked about this several times. So if a 15-minute change of character can't happen right here, and for example, price reacts on this 15-minute last recent demand zone down here and breaks above this zone, we can expect the tap of the upper supply zone, and we'll be able to write the continuation bullish order flow after this 4-hour supply zone. Okay, what can happen if this supply zone is being tapped, if this upper extreme supply zone is being tapped? For me, the only possibility that could happen on this supply zone is a change of character. I believe the break of this zone won't happen. I'm seeing really low possibility for the break of this zone. I believe the change of character will happen here, and the continuation of the huge bearish order flow will be continued. So I'm expecting a deeper price action. I'm expecting a deeper price action after mitigation of this zone. And if you ask me, I really believe that this upper zone, this upper area will be tapped. This upper supply zone may be tapped. Because I believe this supply zone won't be able to reverse price. This liquidity has to be swept in order to reach deeper price action areas. And this liquidity has to be swept in order to break below these demands on this daily demand zone that we're currently in. So I believe this supply and liquidity has to be swept and supply has to be tapped. And after a tap and sweep, we'll be able to see deeper price action areas, and we'll be able to see the tap of this overall daily extreme zone down here. And if the tap of this daily extreme zone happens, we'll talk about the new possibilities. But for the higher time frame upcoming possibilities, that's enough. That's even too far away. We don't know what will happen after the tap of this zone, but we'll find the reason. We'll find what will happen after the tap happens. So yeah, these are the higher time frame possibilities and the expectations. Once again, I believe this liquidity will be swept. The tap of this zone, this 4-hour zone, will happen, and the reversal will happen on this zone, and we'll see deeper price action areas, and we'll see the tap of this daily zone. Let me just read the chat. Hey Marcel, check you for today. I think it's live example. 15-minute liquidity broke and rejected. I will just check it. There are two 15-minute demand zones. On the week, price broke only 15-minute, and now it's being reactive from second 15-minute demand. Could you please advise on that? I don't really understand this question, sorry. If you look at the 15-minute, we can see a clear 15-minute sweep with 1-minute change of character. Okay, I will see that. Let me just see that. Because the 15-minute is next chart. So here was a break of structure, clear body break of structure. Let's find the last recent supply zone that we could refine our zone on. And this would be a good supply zone, good 15-minute supply zone for us that has caused the break of this 4-hour low point. But there's another decisional zone on the 15-minute chart too, which is this one down here. This is our decisional zone. that has caused the break of the structure on the 4-hour chart on the 15 mid from a 50 mid candle. So we have these two. Yeah, that was a flip zone also. I agree. So we have these two supply zones on the 15 mid chart. The first one is the decision, and the second one is the extreme. The second one is, sorry, let me just mute my phone. The second one, so the upper one, is the 50 mids, I mean the 4-hour zone. So we can consider this zone as a 4-hour zone, and we can consider this as a 50 mid zone. So what do I mean under this? So if price steps into this zone, this 50 mid zone, I believe the 1 minute change of character will be enough for the continuations, but it's much safer to wait for a 50 minute change of character inside of this zone too, because I believe this zone is part of the 4-hour zone too. But I do consider this as a 50 minute zone. Yeah, it is part of the 4-hour zone too. But I consider this zone as a 50 minute zone and not as a 4-hour zone. But for a continuation, for a short continuation, a 50 minute change of character right here in this zone will be much stronger than just 1 minute change of character. Okay, let me just really check. What did you mean, guys? Where was the liquidity sweep? Right here, right? With the double taps. Exactly. Basically, that's what I was explaining. Exactly, this is the same scenario that I was drawing. Okay, so as you can see, here's liquidity. Here's a clear supply also. Here's a clear supply, 50-minute supply zone that causes the inefficient movement to the downside, etc., break of the structure, etc. And there's liquidity, perfect equal taps. As you can see, prices swept the equal taps with a weak movement, and the body has closed below the supply zone. So it has closed inside of the supply zone. Or, sorry, we have a new supply area right here. And prices closed inside of the supply zone, as you can see. So it couldn't body break above this supply. If I switch to the 1 minute chart, I believe the change of character has happened right here, just exactly that I drew on the arrow movements. As you can see, this was the last low point that has caused the change of character. I mean, sorry. This was the last low point that has caused the sweep. And as I said, all of these orders, all of these liquidity orders, all of these stop losses have been converted into new orders right here. So the last recent zone has been broken. The last recent zone has been broken because these fresh and new placed orders are stronger than the small 1 minute demand zone. This equals the break of this zone, right? And this equals the break of another zone because there was several change of characters. As you can see, here's the first, here's the second, because this is an inside bar, so this counts as a demand zone. Second change of character, third change of character right here. As you can see, body broke below this zone. So this is a really strong change of character. But there's a problem with this, that it happened in lunchtime, right? This is the only problem with this, that it happened in lunchtime. But the concept works perfectly, as you can see. That's what I was talking about. The exact same thing happened that I was talking about. Liquidity line, supply zone, sweep of the supply zone with 50-minute weak candle. So this was just a week on the 50-minute. Orders are being collected, stop losses are being collected. All of these old stop losses have been converted into new orders right here at this candle. All of these new orders have caused the impact movement, inefficient movement to the downside, break of this last recent demand zone that has caused the sweep. And that's it. Perfect textbook example. Thank you guys for pointing it out. So yeah, let's just go back to the 15-minute chart and let's see what's happening actually. I'll just remove this zone. Okay. So let's just find the zone right here at this region. Because as you can see, prices reverse seems like in the middle of nowhere and change character on the 15-minute chart. Reacting on that 15. Oh my God. Reacting on that 15-minute character changing zone down here. Reaction on that zone and continuation. So it seems like it reversed in the middle of nowhere, but we have to find if there was a good reaction point down here at this deep of the candle. Okay. Price could reverse somewhere around here. And if you take a closer look, there's no clear 15-minute demand zone that price is reacting on, just the extreme of this whole movement. So we could consider this as a demand zone because this candle is the extreme of the whole bullish movement. Let me just show you. So this candle, I will just extend this. This candle is the cause of this whole bullish order flow. just like the daily was the cause for the whole daily bullish order flow, right? So it isn't a strong demand zone because it didn't do shit, it didn't change character, and didn't create anything, not a liquidity sweep, but is the cause of the whole bullish order flow to the upside. So I will just mark it out that price has stepped into this demand zone, reverse on this demand zone, and after a reversal, it created a change of character, as you can see on several places. Right here, firstly, or secondly, and right here, right here, right here, right here. Okay, after a change of character, price has stepped into this demand zone down here, and after a demand tap, it changed character again. Because as you can see, this is a character changing movement to the upside, break of structure to the upside, last demand zone, price has changed character here to the downside after this supply reaction, but price has stepped into this demand zone, and after a tap of this demand zone, it changed character again to the upside right here, but it tapped into a supply zone right here, reversed, tapped into the last character changing demand zone down here, reversed on that character changing demand zone, swept the liquidity, and reversed again. So seems like, sorry once again, so seems like price has created a range, right? Price has created a range, and the upside range has been swept. This was the upside range sweep. What can we expect from the downside range? What if there's a range? What can we expect from? Exactly, Nikita, thank you once again. If an upside range is being swept, the downside range will be swept too, because there's a liquidity trend line, as you can see. And this liquidity trend line has a high possibility that it will be swept out, because the sweep of the upside range has happened. And knowing the fact that all of these ranges will be swept on the upside and downside too, after upside range sweep, we can expect a downside range sweep too. So more likely I'll be looking for short opportunities. But first, I'll be looking for short opportunities down to this demand zone, because this is the exact same scenario once again, right? I just draw this scenario. This demand zone has caused this sweep. So we have two scenarios on this demand zone that I was talking about. The first scenario is a change of character on this zone and continuation of the longs. The second scenario is the 50-minute break of this zone, right? With a 50-minute candle, closure, and the continuation of the shorts. The exact same scenario is happening that I was talking about at the beginning of the session, and this is beautiful. This is literally beautiful. Okay, so what can we do in this scenario? We can wait for the end of the lunchtime session. We can wait for the end of the lunchtime zone. And after that lunchtime session is being ended, we'll be able to look for 1-minute confirmation entries. For example, on one of the lunchtime zones, because all of these zones right here, all of these downside movements are in the lunchtime zone area, right? As you can see, all of these movements are in the lunchtime area. So if lunchtime is, when will it end? Lunchtime is ending in 8 minutes. If it ends, and for example, price taps this 50-minute zone inside of the lunchtime area, but it reacts on this zone, and after the reaction, lunchtime ends and creates a change of character outside of lunchtime, that will be a clean setup. For us. But if price breaks below this zone in lunchtime, I believe all of these lunchtime areas will be swept. And we'll be able to look for a long possibility, long opportunity right here after the sweep of this downside liquidity. But it's really, really noisy right now. It's really noisy. We have to wait for a clear price action, and the clear price action will be shown right here at this demand tab. If this demand is being tapped, we'll be able to wait for a clear possibility. We'll be able to wait for a clear reaction, right? And those two reactions, those two possibilities could be the ones that I showed you on the beginning of the session. Are there news today? Yeah, news in 35 minutes. Yeah, just learning from our mistakes. Yesterday, we opened the position on the news, on the CPI news. We won't do the same mistake again today. So we'll just be simply waiting for the news to be released, right? That's all. If the news will be released, I'll be sending a markup update for you guys. After the market update, we'll be able to look for any possibility for this session. But right now, it's a waiting game. And it's not really necessary to take a look at the 1-minute chart and take an analysis on the 1-minute chart. because news will be released. We are waiting for this 15-minute zone to be tapped. And after the 15-minute zone tap has happened, we'll be able to make our 1-minute markups. But right now, it's pointless, right? So once again, 15-minute chart. What can we expect from the 15-minute chart? Range. Upside range has been swept. Downside range is still up right here, but here's the zone that has caused the upside range sweep. We have two possibilities on this zone. The first one is the break of this zone with a 15-minute candle and the continuation and the sweep of the downside range. So we'll be able to write the expectation of downside order flow. Second possibility is the reaction on this zone, change of character, and expectation order flow riding after this supply zone here. These are the two possible scenarios for this session. And these are really high probability setups, because one of these scenarios will happen for sure. One of these scenarios will happen. Either of the break of this zone and the downside range sweep will happen, or either of the tap of this zone, change of character, and tap of this upside zone will happen. And this is for sure. These movements will happen. If not even today, it will happen tomorrow. So yeah, these are the expectations for the upcoming day and week. Let me just read the chat real quick. When we can enter trades after news and before. You can't enter before. You can't really enter before news, because you saw what happened yesterday. So you don't want to become part of the liquidity, and you don't want to become, you don't want to being swept out with the liquidity. And yeah. But after the news, basically 1 minute before, no, never before. So after the news, basically, if the news have been calmed down, if the storm has been calmed down, basically that's all. If you see a clear price action after the news has been released, you can enter in a position. If it's noisy and there are lots of huge candles with, for example, 30, 40 pips candles, you can't enter because that's noisy. You have to wait for the storm to calm down. Okay, guys, the session opens in 4 minutes. I believe we've talked about everything, every single possible scenario for today. How is your journey, Marcel? You mean the trip, the holiday? Nikita? It's going pretty well. We are having a trip every single day in the forest. We are chilling in the sauna. And yeah, we are enjoying ourselves, eating lots of good food, cooking, setting a campfire. It's like taking a break away from the civilization. The only problem is that I have the monitor right here and the community. So yeah, I can't really take a full break away from the civilization, because I have to take care of this group and the community, and of course the Forex. But yeah, it's going pretty well. Share your picture. Okay, I will share some pictures. Thank you, Nikita. Kind from you. Appreciate it. So yeah, guys, just one more minute.
Don't hunting after chickens.
Just a minute, guys. Today I'll be trading for example, 2 hours or 1.5 hours, because from 4 p.m. we have to do something with my girlfriend, and yeah, we have a program and we are going on a trip. So yeah, this session will be, for example, 2 hours for me. But yeah, I'll be sending the markups, not markups, because this session was the actual markup section, and I'll be sending the markup updates after the news are being released. Not that something. Not that something. So yeah, guys, and one more thing, please just stay for 1 more minute. I will host the backtesting session on this weekend. I am not sure the exact date when it will be, but I believe the backtesting session will be on Saturday and not on Sunday. And I will make a vote for you guys if Saturday or Monday is the better for you. Saturday morning, it won't be good for me. Saturday night will be good for me, or late afternoon. But I will post the vote and you'll have to vote for this. So yeah, guys, there will be a backtesting session. That's the point. That's the ending line. So yeah, don't worry. There will be a backtesting session. We'll backtest again. So yeah, guys, thank you for being here. Thank you for being part of this session once again. I hope it was valuable for you. I hope you learned something new from this session. And yeah, wish you a beautiful trading day. I'll be sending the markup updates after the news. So after the news are being released, I'll be sending the markup updates. And yeah, guys, wish you a beautiful day. Wish you a beautiful rest of your week. Thank you for being here. Love you guys.
Thank you for being here, guys. Take care.